Ladies and gentlemen, very welcome to our first quarter result presentation. VARTA gave first developments of the first quarter, but I would like to start with a short reminder where we came from. As a tech company, we have a strong history and a strong profile, which gives us a good development for the future. When you look into the performance of the last years, we had a revenue growth year-over-year of 39%, most of that organically, and finished last year with 31% EBITDA margin. Our protected technological leadership is, I would say, underpinned by more than 450 patents in the utility models. We have global leader market positions in attractive markets. TWS is the most prominent ones. That is an area of the earbuds which you wear, which you use day in, day out. Well-balanced product portfolio, two different segments. I will touch that a little bit later. And of course, we behave sustainable. I will touch that in a second. So where we come from when we say as a technology leader, and this is not a chart to, I would say, to take point by point, but to give you, I would say, some indications why we think we are a technology leader in many, many areas. If you look from the left to the right, then the material development, for example, we increased the silicon proportion in the anode, and that gave us an energy density improvement of 30%. And when you look into the headers, the material development is only one part of our, I would say, success story. Cell research, design in, process development, tool shop, and engineering are the others. The second one, if you look into the cell research and development, innovative housing, if you think about that our cells are super small, it makes a difference if you have clever enough and can, I would say, close the cells and increase the inner space, which gives you, I would say, the opportunity to increase energy density. Process development, winding machines, that is the core of the TWS production. Those winding machines, if they do quicker in the process and we increase that speed by 5 times, you immediately get more output, are more efficient. And sync air, which is used as a chemistry for the hearing aids, this is as well an area where we automate. We currently run the total production with 10 people, and now we have an automated centrifuge, which gives us another, I would say, opportunity to be more efficient. All those elements give us, I would say, the possibility to increase, to improve, and to do better in the future. So how do our clients improve, or how do our clients profit from this development? What you see over here is a typical, I would say, TWS producer, a very prominent one in the world. And you see with our products, which got smaller and smaller, they could develop, I would say, smaller products and more, I would say, better products. Better products means more talk time, more listening time, and noise cancellation. All of that helps them, I would say, to differentiate themselves from the competition. Are we successful? And you see that over here. And this picture gives you, I would say, a clear #1 position in these 3, I would say, most important areas: the hearing aids, the TWS, and the consumer batteries. We are already #1 worldwide or Europe-wide. The top 10, they will improve their market position because currently we work on a larger format cell, which we can import and use in those 2 segments. And then we will get, I would say, higher profitability and more growth opportunities. And this is done in a manner where we try and to improve our sustainability, so our footprint in the world. And you see, that's nothing new for us. We do that since 2007, and you see the 4 parameters and aspects. We reduce CO2 emission by nearly 50%, waste reduction nearly 60%, water consumption 75%, 64%, and gas consumption. So we get more efficient and we behave sustainably in a good manner as a manufacturer. So first quarter came in somewhat soft, in line with our expectations, but below quarter results of the first quarter last year. You see that we have impacts from a couple of, I would say, aspects which you all know. We suffer from supply chains disruptions from our clients. So our clients produce the TWS, for example, in Asia. And those manufacturers over there have standstill times due to COVID, due to, I would say, energy shortages and so on. And therefore, they ask less and lower numbers in batteries. Adjusted EBITDA as well suffered from that. So adjusted EBITDA margin currently is around 30% and was ahead of that in the comparable quarter. In total, we are still optimistic to have a much better second quarter. We have announced clients who gave us, I would say, the security that they will launch new products. Those new products will be equipped with our batteries. So from that, we are still optimistic for the rest of the year. How we do the financing, you know that chart from last presentation, so it's an update for you. Read that from the right-hand side to the left-hand side. We are currently at a net debt position of 266 million. That translates into 1x net debt EBITDA ratio. If we go to 3 times, that would give us another 500 million, and the operational cash flow calculated on a 2-year basis around 400 million. So in total, firepower of around 0.65 billion for the next 2 years. Equity ratio is solidly at 36.5%. And of course, we announced to pay a dividend 2.48 euros per share for this year in the next 2 months. So in the second quarter, we started the financing successfully. We issued 4 different tranches of Schuldschein running for 5 and 7 years, variable and fixed. And the average interest rate at the issuing time is 1.44. So I think good job done over there. This gives us 250 million in cash to be financing our investments. And this is linked to ESG parameters. You see that. You see it could float up to 2.5 basis points up and down. And this is measured by Sustainalytics. What is impacting our business? If you read that from left to right, you clearly see there is a no, a triple no. That means we currently have no direct impact on our production and chip shortages. COVID-19 does not impact us, and we have enough raw materials. Clearly, we have to pay higher prices. But on the other side, on the right-hand side, you know, Ukraine crisis is not hitting us, as less than 1% revenues are generated in Russia, Ukraine, and Belarus, but our clients are suffering. So the second risk for our clients is that they potentially use chips for higher margin products. And that is why some of the TWS production was reduced. And if they reduce their, I would say, production capacity, they need less batteries. And that is what hit us in the first quarter. So no direct impact, but indirectly, we are hit by this development. So what to remember? VARTA still profits from its technological leadership, innovative products, and strong brand. We are paying dividends, so that is the announcement of the company. We still aim to go for 950 to 1 billion in sales for this year. Second half year will be stronger than the first one. We see the impact from the war in the Ukraine, price of raw materials increase. We react on that. So for example, we increase the number and the volume of raw materials on board. And of course, we are working hard to bring the next growth initiative into life. And that new growth initiative is a large format cell, which goes into the e-mobility and goes as well to all the other business opportunities which we are already undertaking. So from this, a mixed view on Q1, a positive view on the total year. And with this, I would like to end the update. Thank you very much for your interest into VARTA. Stay close to us. Of course, we will have a lot of news flow during the rest of the year. Happy to talk again very soon.
Since you watched this company video until the end, I'm guessing you liked the video. That's probably because we work very hard to create the most engaging and value-added content possible for you. If you're a stock-listed company or corporation and want to find out how we at C11A can make a company video with and about you, please email us at community@c11a.com.